It's the biggest IPO in market history, $1.75 trillion, and everyone is waiting for the ripple effects of this launch to hit the entire market. But are investors getting this one completely wrong? Joining us today is Brett Eversole with Stansberry Research with 3 myth-busting perspectives on exactly what this SpaceX IPO could mean for the market and how investors can profit most. So Brett, we're going to hear your perspective today on what this IPO could mean for the market, whether investors should actually be investing in SpaceX, and also your outlook on the entire AI bubble story and just how much bigger that bubble could get before it bursts. I can't wait to hear your perspective on that. We've had lots of guests on the show over the last month or so talking about their idea of SpaceX and how big or small or what kind of impact it could have on the market. So I want to hear your take. Do you think we're going to see some massive market moves coming from SpaceX this week?
You know, I've been in the markets for 15, 18 years now, and what I've learned is so important as an investor is to figure out the things that matter and the things that don't matter. And the reality of the situation is we live in a world that is just completely inundated with information. We have, corporate earnings nonstop. We have economic data coming out nonstop. We have geopolitical headlines. We have the news cycle that's being driven this way and that. And what you have to figure out is the 5% of things that really matter so that you can focus on those and ignore the 95% of things that not don't matter, but they're marginal. They're on the edges. They're not the main drivers. And so this SpaceX IPO has gotten so much hype and so much interest and so many headlines over the last 2 or 3 months. And I think that this is just firmly in the 95% of things that you can more or less ignore as an investor. And I think there are a couple of kind of boogeymen around this IPO that have people worried about, will it have bigger implications for the overall market? The first one of those is the size. The company is going to raise about $75 billion. It looks like that could even go up as high as like 85 or 86 with the green shoot, the kind of the excess sale that'll happen tomorrow. And that'll be the largest IPO in history by a long shot. But if you put that in perspective, it's hard with big numbers to understand where they really fit into the overall pie. But the NASDAQ trades about $500 billion a day in trading volume. The NYSE trades about $600 billion a day in trading volume. And this is on average. So you can have days where you trade 2 or 3 times that amount. So $75 billion sounds like a lot, but it's going into a market that trades over $1 trillion a day, if not a lot more. So from a size perspective, can the market handle $75 billion raise? The answer is absolutely yes. It's no problem whatsoever. And we have indications that even the private markets can do this kind of, capital raising without a problem. Last month, Anthropic raised $65 billion in the private market, which I think if you told VC investors that was going to happen 10 years ago, they would have laughed at you and thrown you out of their offices. But they raised $65 billion last month. Earlier this year, OpenAI raised $122 billion in a private funding round. So we just live in a world that is completely swimming with capital. And so while the SpaceX IPO seems large, and it is the largest IPO by far, it is not so large that it's some market worrying or market moving type event, in my view.
That is such a great point to look at and put in the perspective of how much capital runs through the market every single day. This is the first time I've heard that comparison or that kind of narrowing down of just how much money is spent in the market every day. And it's wild to think about $75 billion as this huge number, $122 billion is this massive number. And yet those kind of numbers fly around the market every single day. We make a video every single day that investors are looking at the market. That kind of money is out there. One thing that people are talking about, and I've heard, I think from maybe 3 or 4 different guests now, is that investors are looking to raise capital so they have enough money on hand to invest in SpaceX IPO. Do you think there's any truth to that they're going to have to move some money from this stock or this sector so that they have cash ready to go for this IPO tomorrow?
I think there could be some possible truth to that perspective, but again, you put it in the bigger, larger context. If you have a market that trades $1 trillion a day, if people are going to pull a little bit from here and a little bit from there, in the grand scheme of things, I mean, you think about like NVIDIA has a $5+ trillion market cap. Even if $75 billion of NVIDIA was sold tomorrow to fund all of that buying for the SpaceX IPO, the stock's going to be down 5%. It's not going to have some big, dramatic, massive impact on the overall market. And I mean, this is true of all IPOs that happen. Generally speaking, when you have IPO booms that are happening in market history, Those are not times when the market is going down. Those are times when the market is going up because there's a lot of capital in the system. People are excited and valuations are going up. So you look back at the late 90s, that was outside of 2020 and 2021, that was the last great IPO boom. This is a period when stocks were going up and up and up and up. So it's a idea that makes a lot of sense, but then you study that happening throughout history and it just doesn't hold up over time.
This is so interesting because it's exactly the opposite perspective that we had on the channel just a few days ago. And I love to hear these different perspectives on what is going to happen with this IPO, because there's a lot of ideas out there of how it's going to impact the market. And I think the biggest myth, I think that it sounds like you are busting here, is that SpaceX IPO is going to actually have a massive impact on the market. What do you think about that? Is there going to be shockwaves felt through the market after tomorrow and over the next few days because of this IPO?
I would say resoundingly no. I think the answer to that is no. I think that this is an event that if everyone wasn't telling you that it was going to happen, you would have never known that it happened if you'd woke up a week from now. You'll probably see some interesting trading activity tomorrow. You might see a little bit on Friday. But at the end of the day, this is just how markets work. This is what we do. We build companies, we put them into public markets, the market absorbs them, the trading happens, everything works out. I mean, obviously, Elon Musk is a very polarizing figure. So anytime he's involved, there's going to be people that have very strong opinions in both ways. And then also what happened with this IPO is that, they're going to have early index inclusion. It feels like SpaceX is getting kind of special rules to get into the indexes. And then the second order effect of that is, well, does that mean it's all going to get dumped onto 401ks and passive investors and they're going to have to buy up? They're essentially funding this IPO for insiders. Again, it's a really compelling narrative that makes a really great headline and makes the right kind of people very upset. But, the NASDAQ is going to include SpaceX after 15 days when normally they have a 3 to 6 month period and then they only include in December. But it just came out either earlier this week or late last week, that the S&P is not going to change their inclusion rules. So what that means is that SpaceX is not going to be in the S&P 500 for at least 12 months. And it could be a little bit longer than that because there's a profitability requirement and a 12-month seasoning period for the S&P indexes before they can even consider adding it in. So sometimes there are very expensive stocks that end up in indexes at high numbers, and sometimes they go up, sometimes they go down. At the end of the day, the market return becomes the market return. And that's just kind of, if you're a passive investor, that's what you're taking. Again, it's about size and scope. The numbers sound really big, but contextualized, they just kind of don't matter. $75 billion is not that much money in comparison to the overall US stock market.
Well, before we move on to the next myth bust that you have for us, and that is more on SpaceX IPO and whether retail investors should be getting in on this investment either now or down the road. We're going to get into the business of SpaceX in a minute, but I want to hear a little bit more about all of this money in the market that we're talking about. One of the big questions that came to mind for me is, where did all of this capital come from? Where did we go from, where it would have been unheard of for a private market raise to get $122 billion to that being just really not that significant of a dollar figure anymore? Where did all this capital come from in the market?
The question isn't where the capital come from. It's more of a psychological problem. There's a psychological idea of anchoring. So once you have like a price that you think something should be, if it goes down from that, you think it's inexpensive, and it goes up from that, you think it is expensive, and the actual value proposition might have changed dramatically. You get this idea of a big number in your head, and then anything more than that is huge. And the way I think about this is, I started in this business in 2010, and back then we would think of a mega cap stock as, 75, 80, $100 billion. Right now, a mega cap stock is $2, $3, $4, $5 trillion. And so if you look at $75 billion IPO raise and you think, well, that is too big. Well, too big compared to what? Because this is a company raising at a $2 trillion valuation. So if we think about if this had happened 15 years ago, maybe they're raising at a $200 billion valuation, and maybe they're raising $7.5 billion. Now, all of a sudden, these numbers don't seem so big. They kind of fit into that contextualized framework of what was happening in 2010 or 2011. And so a lot of times people anchor to what they think of as normal from the past, and then the world moves on from them. And so they have a hard time kind of catching up with that anchoring that's going on. So I don't think it's a question of more capital existing necessarily. It's just kind of the world grew up. And if you didn't grow up with it and watch that happen and reacquaint yourself to what reality is now, then these things seem outlandish and ridiculous and unsustainable and all those worrying things you can build into it. But in reality, we kind of stair-stepped our way here slowly, and this is pretty normal.
I feel like so much of what you just said applies to inflation right now, and just going to the grocery store and thinking what a gallon of milk should be at the grocery store historically in context
Yeah.
of what you think that is. So that there's a lot of parallels there, but I don't think we're going to get into that economic discussion as much here. We've got too much to talk about with SpaceX. So again, I really love taking a look at what this looks like in comparison to the market. And I know that you and your team at Stansberry have really been looking at how much more growth is there and how much more of a melt up is there in this market that we've seen tremendous growth in already. And this is where the real money can be made. And it might be one of the last opportunities for some money to be made. So before we dive into SpaceX, I want to share this special offer from Brett and his team. This is for his True Wealth newsletter. And there's some amazing special reports in here. One is the Melt Up Master Plan. And this one has some great ideas for where to still get in for some major growth before it's too late. And that is something we're going to talk about later on in this video. So if you want that special offer, make sure to scan the QR code or click the link in the description to get those reports right now and also sign up for more from Brett on his True Wealth newsletter. All right, Brett, let's get into SpaceX IPO and whether you think this is an actual business that investors in the retail community should be looking at.
SpaceX is a space company, right? This is a rocket company. But SpaceX, I think, doesn't think of itself as a rocket company. So if you look at the company's S1, they did something really interesting in this S1, and they talk about the total addressable market for their business. And they came out with a kind of a crazy figure of $28.5 trillion as a total addressable market, which is nearly US GDP. So maybe that's a little outlandish on its own. I think a lot of people saw that headline number and thought it was kind of crazy, and maybe it is crazy. But here's the thing that's more interesting. Of that 28.5 trillion, effectively 2 trillion is what they say is the space part of their business. Shooting rockets, launch services, getting Starlink going, those kind of internet services. So they view 2 of 30, effectively, of their potential market as space. The rest of it, they said, was artificial intelligence. And the vast majority of that 26.5 trillion, they say, is a total addressable market for artificial intelligence, almost all being enterprise AI services. SpaceX doesn't view themselves as a space company. They view themselves as an AI company. And obviously they've had, the integration happening with XAI and with SpaceX last year that happened. And they've been, developing their kind of frontier models and then also building data centers. And interestingly, they don't really have much in the way of enterprise AI sales, but they think that's where their business is going. If you're going to invest in it, you should understand that.
That is a really good concept to think about when investing in SpaceX for the long term.
Yeah.
I think I want to talk about short term and see what your thoughts are. Talk about timing of this. If you are somebody who's a retail investor and you think that this theory could pay off long term, do you look at getting in that now, this week with this IPO happening tomorrow? Or do you look at waiting until there might be that pullback? I mean, how long out do you think the actual growth and payoff could be for investors with this stock?
Given the valuation and the size, I think it would be hard to have a large kind of IPO pop in the stock. I mean, obviously the bankers who are doing this are very good at pricing these things and figuring out demand. They're not going to price it so it's going to fall 20% on the first day. If they do, that's a colossal failure. And that kind of thing does happen, but it's pretty darn rare. But one thing I think about is to me, is somewhat similar to when Facebook went public back in 2012. So they went public at around $100 billion valuation, which again, as we scale back, doesn't seem that big now. At the time, that was a massive valuation and a massive IPO. They didn't actually raise a ton of money because they didn't need it. But they went public at a very high valuation. Within, I think, 6 months, the stock was down by 50%. And so it was very much a situation where it was a very good company, but they were in this situation where they were still trying to, I don't know if you remember this, the idea of monetizing mobile. People were moving from their PCs into their iPhones, and Facebook hadn't quite figured out how to turn those eyeballs into money yet. So the business had a very high valuation. It was a very large market cap for the time. And there were some questions about its, ability to grow and make money going forward. And because of that, it's not that the IPO was a failure, but the market didn't like it, didn't love it, and it fell dramatically. Now, even if you'd bought at the IPO price, you would have done fantastically over the next 5 to 7 years. But if you had been a little more patient and kind of see how things shook out, you could have bought at a much better price and done much better. I think about SpaceX today, and I think this is a very large company that doesn't have a lot of revenue. I think a lot of its growth is still a ways away. It's not like it's growing at, 200% a year at the top line right now. It could get there and it could grow into this valuation. But for me, and this is all prefaced with the idea that these are not my kind of companies, but I would rather sit on the sidelines, see how things shake out. And if I am excited about it, maybe I have a chance to pick it up at a 30-40% lower price than I will at the IPO at some point in the next 12 months.
I think it's a really level-headed way to look at this launch and this IPO. I also like the historical context of looking back at Facebook, because I think that's a telling story. And so many people and investors right now are saying this market is unlike anything we've seen before. AI is different. There's so much money. There's so much potential use case for AI that this is just going to continue growing. But it is good to look back historically and see how things have played out before and see how that could also apply to what these companies are doing today. So great level-headed approach to looking at whether or not retail should invest in the SpaceX IPO tomorrow or down the road. Let's go on to talking about that AI piece of the SpaceX story. So AI, obviously, we've seen a massive growth story in AI in the market. We've seen tremendous payoffs for so many stocks, up 1,000, 2,000, 5,000% in just the last year, maybe 2 years. These gains are incredible. And I think the question that so many retail investors have is this AI growth story over, or is there still more of these massive gains to be had? And is space the only way that you can play those gains in the AI story, or are there other ways that still have some massive gains to be had?
It's funny, if you'd asked me this question a year ago, I would have said we're in the 7th inning. And if you ask me that today, I think we're in the 4th inning. I think there's still a lot of runway for the story. There's something that's kind of happened this year in 2026 that to me is a massive tipping point that's happening in the AI story. And so what's effectively happened for the last, call it 3 years, is we've been in a building phase. ChatGPT launched, we realized we were going to need tons and tons of compute. And so the hyperscalers, the big companies, started pouring tens and then hundreds of billions of dollars into building data centers. There has been AI development that's gone on over that time, but nobody's really been, at least in large scale, like selling AI products. Basically, all of the boom came on the backs of the infrastructure build out. And that infrastructure build out is going to continue. I think we spent almost $500 billion last year. That's going to be 650 or 700 billion this year. I think by 2028, it could be at $1 trillion a year in data center CapEx build out. So that story's not over. But what happened is this year is Anthropic is gearing up for an IPO as well later this year or early next year. And they did that raise I talked about earlier last month. And in that, they told investors that their current revenue run rate is about $47 billion. Now, that number is big, but that's not really the point. The point is that in 2025, the company did about $4.5 billion in revenue. So they went from 4.5 to 47, a 10x, in about 6 months. What's interesting is that Anthropic has, with their Claude model and their Claude products, is the true enterprise solution for AI that exists right now. So what I think is happening is we've kind of gone from phase 1 of AI was build, put all this infrastructure together. I think phase 2 is going to be sell. It's going to be build products on that compute and then sell it to enterprise as solutions. That's what's happening right now with Anthropic, and they're seeing a massive amount of growth in their business by building these tools and then selling them to companies. Now, phase 3, I think, is going to be what I think of as like ROI, return on investment. People have talked a lot about ROI in relation to the hyperscalers and the relation to the people building all these data centers to sell that compute off or do something with it themselves. But what I think of, we have to think about ROI for the business that is using the AI. So Anthropic is now scaling dramatically, selling their services to businesses. The question is, when do those businesses start to see a return on that investment? Because if you're a business and you go from spending $0 a year on AI to spending $10 million a year, that's only good if you can then prove that it led to $30 million a year in excess sales or in cost savings or in this and that and the other. And so we aren't necessarily to that point yet where the enterprise solutions have pushed out far enough to see if that ROI is going to show up to actual businesses. But to me, that's kind of like the last phase of the boom. And that's where you'll get to that mania type phase. I don't think we're there yet, but this story is developing very, very quickly. Because like I said, it felt like we were a little longer in the tooth last year, but now we've made this tipping point where there's AI sales going into businesses, leading to massive amounts of revenue and growth for somebody like Anthropic. And that's really like step 2. That's the tipping point that is happening right now. And I think a lot of people don't really realize it. They still think about it as a CapEx story. And it still is a CapEx story But things are changing very quickly right now.
Changing very quickly, it feels like the exact way to describe the entire AI story. The growth here has been just so tremendous and so fast. That Anthropic illustration is great, a great one, a 10x the revenue in 6 months. And things like that just feel unprecedented. They feel like, when have we ever seen this happen in the market for these companies, even a private company like Anthropic, which we know that IPO, rumors of that anyway, are on the horizon. But you're saying that there's still a lot of growth to be had because figuring out how to monetize all of this CapEx spending, I think, is a key point. And I know that's part of your timeline in that report on the melt up theory, talking about this is one of the last great wealth opportunities for retail investors. We've seen tremendous growth in AI already, but there's still tremendous growth to be had, at least for a little while longer. So if you want to get that full report and dive fully into the details with Brett, scan the QR code or click the link in the description. Again, this is a fascinating way to look at that timeline on how much more melt up there can be in this AI story. And Brett, I want you to just go into a little bit of those details here about talking about how urgent this is for investors and talking about whether or not we're going to see another event like this in the market anytime soon.
We have a historical pattern that plays out in the US stock market, and it goes something like this. You have a roughly 8-year period where stocks perform very, very well. Then you have some kind of new innovation that leads to a massive growth cycle. And at the end of that growth cycle, you get kind of a blow off top and you get an incredible amount of gains that get pulled forward in a very short period of time. So you think about the 80s and 90s. The 80s were a time when you had a relatively strong economy, but it wasn't innovation driven. It was driven because the 70s were such a terrible time and we got our mojo back, if you will, throughout the 80s. But then the 90s came around and you had the internet revolution. You get Netscape in, I think, 1994, and then it turns into a dot-com boom, which becomes a dot-com bubble. The problem is, after that peak in 2000, it took 13 years for the market to hit a new high. So you have more than a lost decade for investors that comes at the end of these cycles. And so it's very important that you capitalize on the end of that cycle, because what's going to follow is going to be a very painful long-term period for investors. And that's what I expect to happen this time, because the last 2 decades have effectively followed the same pattern. We had the 2010s where the stock market did very well. The economy kind of fixed itself, if very slowly, from the global financial crisis. Then we get into the 2020s and we have this artificial intelligence revolution that kicks off this massive spending boom, and it's creating very much a world-changing technology. The problem is it will overheat. It will blow off to unsustainable levels. And you want to be on the ride for that. You want to take advantage of that as an investor, but you have to be aware of where you are in the cycle, where things could end. You've got to take your profits when the time is right, because what follows those kind of cycles every single time is that lost decade for investors. So if you're 55, you might not see another bull market after the next 2 or 3 years, because once that peak comes, stocks might be dead money for another 10 or 15 years. So I think it's very important to take advantage of this moment, to align yourself, take advantage of this artificial intelligence boom. And I do think it'll last a little longer than most folks realize, but you've got to take advantage of it now, because there's going to be that painful long-term period that's going to follow where it's going to be very hard to make any money as an investor.
Now, this sounds a little bit like that myth-busting question of, is there an AI bubble or not? And what you just described sounds like, yes, there is, but it's not ready to burst yet. Does that sound right?
I think that's fair. Yeah. I think we're getting to that precipice where it goes from a boom to bubble, but bubbles can last a lot longer than most people think, and they can go a lot higher than most people realize.
Really great information today, Brett. Thank you so much for sharing some great insights with our viewers. Again, it's a different perspective. If you want to hear a completely opposite perspective on what the SpaceX IPO could mean for the market, make sure to watch this full interview. It's a very different perspective. And again, it might feel confusing, but it's always good to hear different ideas on what could be happening with the market and the impact that SpaceX could have. You can watch that full interview here.